Good evening. I am thrilled to be with you guys here in Atlanta today. I'm actually a native of the area, right up 75 in Marietta. But I'm more excited to be here today sharing the stage with Wole Coaxum, the founder and CEO of MoCaFi, Mobility Capital Finance. This weekend, I was actually looking at an interview that Ginni Rometty, the former CEO of IBM, gave. And in that interview, she was talking about non-traditional recruiting arenas. IBM spent some time exploring recruiting from high schools, from coding programs, and from vocational programs. And in her conversation, the thing that really stood out to me was that where you start should not determine where you finish. And she said that economic opportunity is the greatest equalizer. Today, I get to join the stage with Wole, and then you guys will also get to have an excellent conversation following this with Tyler Perry. These are two men who have worked tirelessly to create spaces and opportunity and advance us to make more equitable systems. Wole and his team at MoCaFi, through their mobile app and their platform, the partnerships that they've created within their organization, are working to bring tens of millions of Americans into the banking system and giving them the opportunity to participate in our economic growth. So I'm thrilled to be here with you today. Some of you may not know that I'm a novice angel investor. And so I have had the privilege of being familiar with MoCaFi and Wole for a number of years, but excited for him to share his story with you. So maybe just to kick us off, share a little bit about your story, your background, and what inspired you to launch MoCaFi back in 2015 now?
Yeah, 2015. First, it's a great privilege to be with all of you today, and thank you for spending a little time to hear the MoCaFi story. So I started MoCaFi in 2015, but it was sort of in the making for a long time. And like many of you, coming from families where entrepreneurship and trying to figure out how to move the community forward is integral to your upbringing. And so that was the case for me. My family on the mom's side came from Charleston, West Virginia, and we're very much a part of creating economic opportunities for the Black community there. And for me, listening to those stories, I was like, well, what's my role going to be to keep that legacy going? I was fortunate enough to get a great opportunity to start my career at what's now Citigroup, and I spent time at Willis, which is an insurance broker, and then was at JP Morgan. And was one of the most senior Black people there, and I had my George Floyd moment after the death of Michael Brown. And I was thinking to myself, here the community is suffering, fighting for social justice, and what's the economic justice agenda that's going to move our communities forward? And I thought, I could spend more time working with JP Morgan, which is a great company and plays a very important role in the economy in this world, but I felt that my time and talent could be better served helping move the community forward that I come from. And so I thought I could either buy a bank, I could start a fund to invest in companies that can focus on these problems, or I could start a company. And one of my mentors is a big insurtech investor. He said, Wole, I've invested in things like SoFi and Lemonade. I think you can start a company. And I said, okay, if you think that, let me take my time and talents and do that. And so really MoCaFi is an idea that says, how can we bring high quality products and services to Black and brown communities to help people on the journey towards creating and building wealth? And you have to have access to resources, you have to have products and services that are geared towards our needs, and then you can start moving forward towards creating and retaining wealth and passing it on to other generations. So that's a bit about how I got to this place, and I got to tell you, it's so satisfying waking up every day, figuring out how to move communities forward, and being able to partner with so many great folks like you at Wells Fargo and others to figure out how do we solve this issue. I mean, right here in Atlanta, you got people who are, half of some Black folks in Atlanta do not have resources, have any net worth, right? You've got the average family, or the median family, has a net annual income of $35,000 versus their white counterparts, it's $100 and some odd thousand. And there's lower home ownership in the black community today than there was when President Lyndon Johnson signed the Fair Housing Act in 1968. So these are the kind of issues that we got to deal with if we want to move our communities forward and take advantage of what the former CEO of IBM talked about. But we're going to have to make our own luck, right? And we're going to have to make our own economic opportunity. I wanted to be a part of that, and MoCaFi is a way to do that.
Yeah, I mean, we're really fortunate to have you and people like Tyler creating these businesses that are really going to transform systems, right? Or even in some ways break down the challenges that we've had in systems. I think the audience might be surprised to hear that nearly 5% of Americans are completely unbanked. 15% are underbanked or would be considered underbanked. And you've hit on some things here, in order to build wealth, you kind of have to start at the basics. And then from there, you really have to find the ways to make your money work for you. At MoCaFi, what's been that journey? How are you guys bringing people into the system? And then where are you taking them from there?
For sure, and in Atlanta, that number, so that 5 and 15%, that's 20%. In the black community in Atlanta, that's 40%, unbanked and underbanked, right? So already we're double the numbers. And so what we've figured out at MoCaFi is how can we put people on a journey towards economic mobility? And it can start, quite frankly, in some instances, folks just need resource, right? And so the pandemic highlighted the fact that the government actually can put lots of dollars to work in a relatively short period of time. But if you don't have a bank account, if you're operating when check cashers are your main way of getting access to resources, somebody sends you a check, it's not helpful because it might not get to you. Someone may intercept it, and you're going to have to pay a fee to get your own cash. So we've built a whole framework of what we call financial services as infrastructure. I'll bring it to life for you. So Mayor Garcetti in 2020 said, I want to create, this is the former mayor of Los Angeles, said, I want to create contactless government. I want a way for residents of Los Angeles to be able to have single sign-on for city services, a way for residents to be able to receive money from the city electronically, and a way for people to pay for city services electronically. There are 500,000 people in LA, or there were, 500,000 people in LA who didn't have bank accounts. So we were able to put our infrastructure in place to enable over $70 million to get to Angelenos, whether it was the largest universal basic income program in the country, whether it was $20 million of emergency rental assistance to allow people to stay in their homes, whether it was, hey, people were displaced by a fire. And so what now exists in Los Angeles, and I'm so proud of Mayor Woodfin, some of you may know, he's in Birmingham, Alabama, and he's been a big proponent and user of our services to get resources to families in Birmingham. And we just announced last week with Tashara Jones, who's the mayor of St. Louis, that she's going to be using our platform. We've been spending a lot of time with the mayor here talking about how we can bring some of those services. But we recognize that if you want to be on a path of creating wealth, you just have to find yourself in a stable situation.
Yeah.
Once you get to a level of stability, then we sort of say, hey, we got bank accounts for people. And the way we've thought about bank accounts is how do we turn stores like 7-Eleven, Duane Reade, Family Dollar, Dollar General into bank branches. And with partnership with Wells Fargo, we now have 85,000 free ATMs across the country. And then you can turn the same stores into places where the people can put cash into their account for free. So as many of you know, 80% of the bank branches that have closed in this country have been in low and moderate income communities, right, which is code for black and brown communities, by the way. And so they've left. And so technology is an opportunity to bring something to that individual so he or she can become a part of it. And not only that, but we then say, okay, it's one thing to be able to deposit your check for free, immediate access to your funds, but now we're going to take your rent and report it to the credit bureaus. And now we're going to look at utilities and try to report that to the credit bureaus for you. So we're now helping people move from, okay, I need to do basic banking, which, some people can spend more money on alternative financial services fees, which is code for check cashing and pawn shops, on an annual basis than they do on food. That is completely ridiculous, right? So we're in a position to people to be able to keep that. So giving somebody a raise, then if you can take their credit score and help to improve that, interesting statistic. Only 25% of African Americans have a credit score greater than 700. Our white counterparts, that number is plus over 50%.
Wow.
I don't believe that the black community is less credit worthy than the white community. But we have structural things in place that have made it such that things like rent, which for some of us is our biggest expense,
right,
is not in the credit file. And as a result of not being in the credit file, that limits our ability to get jobs, it limits our ability to get low-cost credit, it limits our ability to get mortgages, it increases our cost of insurance. So we're trying to, so we're using banking in a way to bring more people in. And then from there, and this is what I'm so excited about, we're able to help people think about the home ownership journey.
Yeah, that's such a huge component.
And then with the home ownership journey, we don't need to go into the lending business because we've got wonderful partners like Wells Fargo, who has a fabulous balance sheet, but they may not be in the community in the same way that we are.
That's right.
But together, we can bring their resources with our ability to find what I like to call the hidden figures, right? In New York City, they did an analysis where they took a subset of people and said, if you live in New York City housing, which is public housing in New York, and we take your rent and we put it in your credit file, what would the impact be? Everyone saw an increase in their score. 25% of the people who were thin to no credit file became 700 credit score better. So anyway, so if we can work with folks in communities, help them build their credit scores, and then they become great customers for all the banks that have terrific balance sheets. So that's where we're trying to address that. And then the final thing is really imagining we're going into community. We have these on our blocks where we're actually showing up in Del Mar Divine in St. Louis, or we're showing up in Compton or Watts, or we're showing up in Harlem, or we're showing up in Birmingham, and we're bringing all these resources to the communities that people have left. And I got to tell you, it's just so satisfying. And we recognize that it takes a village, right?
Yeah.
It takes a lot of partners, like many of you in the room here today. It takes folks who, like the great folks at Greenwood, takes people at MoCaFi, who are all going in and trying to figure out how might we bring more resources to our communities, because don't get it twisted. Our communities are smart, savvy, have got great ambitions, and we have oftentimes had to figure out how to make things work when there's more month than money.
Yes.
But if we're able to then bring additional resources, make sure that the resources that are available at city government, state government, federal government, gets to people so they can get a level of stability, then the sky's the limit. And then that economic equality can happen, and we can be the captains of our own ship, whether it's through home ownership, whether it's through entrepreneurship, or just investing in markets that we haven't otherwise had access to.
So I will share two anecdotes that really resonated based on what you just said. I invest in women and minority entrepreneurs because they have more month than money, right? And they figure it out.
Yeah.
They're resilient. They know how to overcome things. They know how to make a lot out of a little.
Yeah.
And to me, that's the best investment thesis I can have.
Yeah.
The other thing that Jenny did say was that for all of these individuals who came from non-traditional backgrounds, they were more loyal, they were more retentive, and they outperformed those who came from doctorate programs and undergraduate programs with about a year lag getting up to speed. And most of them went back to school.
Yeah.
So when you give people the resources and when you create systems that work for people, they can uplift themselves.
It's a tale as old as time.
It-
But you got to be in a position, though, where there is real intentionality
Yes.
to make sure that the resources get to different communities, and there have to be systems in place to ensure that those dollars stay in community. I mean, that's why the gathering spot is such an exciting example of that. because it's a great example of community coming together to support each other. And the fact that $1 in the Black community stays within our community for minutes, maybe seconds, is a real testament to the opportunity that we have to reimagine how to turn that from seconds to minutes to hours to days to months. And that's what's going to be required for us to really take advantage of the economic opportunities that you're investing in. And I got to give you great credit for doing that, because we talk a lot about the fact that traditional venture capital doesn't get to our communities
That's right.
at the same rate. But, you know, there's no reason why friends and family cash can't help a business. I mean, even starting MoCaFi, our first 3 years of existence was based on friends and family investing in the business, because it was difficult for someone to see an alternative path to create financial services responsibly for markets that people have walked away from. So we had to take it upon ourselves to fund the business through the community,
Right.
to be able to prove that, hey, no, you can actually build a high-growth fintech business that focuses on the bottom third of the pyramid.
Absolutely, and you've had tons of success with that. There's mics walking around somewhere, so if anyone has questions, I'll let the mics find their way to you, but I'll pose another kind of thought.
There's a question right there.
Excellent.
Thank you guys for taking time to come out and talk to us. I was going to ask you, just from a cost of capital, like everybody says, when you get these credit scores and if everybody improves, and what I know about finance is going to drive up the cost of some of these banks to be able to service more people who are doing well. What is your response to that, that problem when you have too many people who have better credit scores who are doing well that these banks have to service, when the model for so long has been structured around a certain group of people doing well and a certain group of people doing not well, and that is the model on how they determine what is profitable for them?
So that's a good question. So I actually think that banking is not necessarily a zero-sum game. I'm not, it's a myth that, in my mind, that in order for someone to do well, someone else has to do less well. And it's particularly true, banks have a problem. They've got lots of cash, lots of deposits, and they don't have enough places to put it from a responsible lending perspective. So my vantage point is, hey, if you can go, just go back to my New York City Public Housing Authority example, if there are individuals who are 700 credit score or better, the banks will line up out the door to make loans to those people. And so I don't think an improved credit score is the detriment of somebody else. The one thing that maybe you're thinking about is the cost of delivering services is quite high. And so unfortunately what ends up happening is banks have historically, and there's been a great movement away from this, have used fees, ATM fees, overdraft fees, as a way to make money on somebody who doesn't have enough of money to be able to make money on their idle deposits. And so what we've said is, you know what, maybe it's time for other partners to get into this space, so there's a series of options that make sense for the consumer. And partnering with Wells and other traditional banks, it's been great, because now you can go back and come up with a product that makes sense for everybody. But it's not a zero-sum game. There's a great book, if you haven't read it, called The Sum of Us, which I highly recommend everybody read, which talks about how white communities actually put themselves at a disadvantage because they believed in that zero-sum mentality. I can't recommend that book strongly enough. There's a question over there.
Yes, my question is, how do you integrate, and how do you think in general our community needs to integrate what I term as the African American financial engineers into these discussions and these equations? It's almost as if we don't exist. And some of us, you know, are concerned only about ourselves and our families, but there are others of us who are concerned about the community in general. And they're my friends. So how do we incorporate those pink elephants into the thinking and these equations and designing these products and services and in crafting these strategies for our community, for people that look like us, who many people don't even know exist. And I'm referring to the black CFAs and the investment bankers and the, private equity guys that I know and others, and just the thought leaders that look like us that most people don't even know exist.
Yeah, that's a great question. So, like Shannon, who's still in the game, I'm a retired investment banker, and I think part of what's required is we need a little bit of a village, right? You need people who are inside organizations who are building their careers as bankers and CFAs and treasurers and the like, who are in a position to use those institutions to support the people who then, like myself and others, who leave the traditional banking environment to try to do something new, to reimagine systems and build businesses that can support our communities. And if you have people on the inside game and the outside game, that is how you come up with new businesses and new strategies. And the reality is, a lot of people, if they're CFAs or investment bankers or commercial bankers, they're going to be under the radar screen people generically, right? There are not a lot of people who can create, particularly in this day and age, who can create a persona that they can be known as the leader of the black community from a banking perspective. But I do think at a local level, when those individuals get together and doing what you do, at both personally and professionally, personally investing in black entrepreneurs. I mean, women entrepreneurs, black entrepreneurs are the fastest growing group of people who are starting new businesses. That's not going to show up if you make a $25,000 investment or a $50,000 investment in a black woman entrepreneur. That's not going to make it on the cover of the Atlanta Constitution, but that's going to be transformative in terms of helping that individual build a business that could end up hiring 3, 4, 5, 6, a dozen people. So I think it's community activity that's then highlighted in spaces like this, so people whose names you'll never know but are doing the work actually continue to do that work and find inspiration to know that it's going noticed and their impact is being highlighted. So it's probably not, I just think this is hand-to-hand combat. And the last thing I'll say, and I know our time is up, but next week I'll have a chance to go to the Treasury Department. And the Treasury Department is having a celebration of the Freedmen's Bank. I can't remember the year, but I think the Freedmen's Bank was created in 1865. And so they have, every year they have a celebration of that. And for those of you who know, the Freedmen's Bank was created when Lincoln freed the slaves, so that the freed slaves and folks coming back from the war would have a place to put their money. That bank had a lot of customers, and I can't remember off the top of my head what the number is in today's dollars, but it was a significant bank. And people took their wages and they invested in the bank, and they thought it had the good housekeeping seal of approval of the federal government because it was created under a federal order. Well, in fact, it wasn't. It was mismanaged by folks in DC. They got so bad that they had Frederick Douglass put his own money in so they could use him as a poster child to tell everybody that the bank's going to be okay, but the bank went under. And in my estimation, I think that was the beginning of the end, quite frankly, of black folks believing and trusting in institutions. Yeah. And so we've got 150 or 670 years of history that we've got to make up for just, in the post-slavery era to find our financial footing. And it's going to take partnerships like MoCaFi, Greenwood, Wells Fargo, Gathering Spot, and others, LISC, to come up with a whole program, but we can do it. And there's great opportunity and a lot of talent. So I appreciate the time. I appreciate the chance to sit on the stage with you today, Shannon, and look forward to continuing the conversation.
No, I look forward to it. And I think that's the most important thing is starting this conversation. I think we've all seen examples where when we invest in ourselves and invest in each other, we see tremendous success. And so I would encourage this conversation to continue. You know, to Wole's point, there's a lot of talent, and it's our responsibility to capitalize on the talent and the knowledge that we all have. And whether it's your time, your wealth, whatever it might be, pour back into the institutions, the organizations, the entrepreneurs, and just talk to your friends and family about finance. That's another thing that's been very taboo in our communities. So thank you guys all for your time and attention. Wole, thank you. It's been such a privilege. And we look forward to the next speaker.
Absolutely.